One thing also to note is that just to close up the conversation on liquidity. So over here we're in the zone here of this liquidity lull. And so the current liquidity, the current the live liquidity is sort of consolidating sideways. It hasn't dropped, and our lag liquidity is headed up. So I'd be very, very, very surprised to see a move down. I mean, look how strong this wick was. This wick over here and this wick over here. The wicks tell us how strong the move is, like how strong the upward bias is, or whatever that wick is. Yes, we also had a big wick over here, but this is telling us that we should be staying around this area. That's generally what's telling us because of liquidity, and that's what we're seeing here, with a bias towards the downside because the liquidity is headed down. So we'll see what happens. There is an issue here of, actually, just take this off because that'll be it for that. There is an issue of where the next liquidity is going to come from. We were paying attention on the January 29th Fed meeting, what Powell was going to say there, and he said they're pausing. They're not cutting more right now. It made sense. The market was pricing that in, but also nothing in the data was showing that they should cut. There was no emergency they should cut for. There was this issue of this question of, would Trump insist on Fed cuts? And if you guys actually go take a look at my video on with Mike Christensen on Traders Post that we did last Friday, I go into all kinds of details of how Donald Trump seems to want a strong dollar, seems to not want to cut, seems to want to do legitimate things in order to lower long-term interest rates on the 10-year, which doesn't lend itself to short-term gains within the markets, which sort of makes sense. He's a second-term president. He doesn't need the market to be at all-time highs if what he wants is legacy to make sure that the economy is actually doing well when he actually leaves. What he should do is what he's doing now, cutting spending, domestic programs, increase GDP, eliminate trade deficits, the sort of nationalism, protectionism, which is not good for Bitcoin to the moon. So what we can expect is one of two paths where.
But wait, they could do the reserve. If part of what he wants to do is to fix the debt and all that stuff, wouldn't he adopt a Bitcoin reserve? Don't they have to make the Bitcoin play in order to save their country?
The Bitcoin play is not a. I don't really know why people say this. It's not a net bullish on the asset. Like, just because they're going to, first of all, the reserve they're going to create is going to come a lot from the Bitcoin that they've confiscated. There's no net buying, right? So people would think like this is going to be like Michael Saylor's MicroStrategy, where the government is just gobbling up a bunch of Bitcoin and the Bitcoin prices go to the moon. Not exactly. And
No, but it's going to start the other countries are going to get their 2% reserve, and isn't that what you talked about?
Sure, but if we're talking about our trades that are week to week, month to month, maybe quarter to quarter, that's not happening now. That's just not going to happen now. So before he did put out a call for I think to whom, but to provide guidance on how they should be doing the strategic reserve, if they should be doing it, what are the impacts on the economy and stuff like that. And he gave them 180 days to provide the report. So then you have to assume another 180 days before the earliest before a bill is actually issued. That needs to be voted on, and then it needs to be ratified by the Senate, and then it actually needs to be put into place. I don't think it's going to executive order a Bitcoin reserve. I don't see that happening. And so you're looking at a year and a half, 2 years, the soonest before that really comes into play. Fine, people front run that.
So
You still need liquidity. You still need liquidity for it. So the actual concern right now is that as we're heading now into this window of weakness for the economy, like I showed you, the liquidity is low. We're not off a cliff, but it's consolidating sideways. If we're in that period of weakness and then something happens, some external exhaustion shock happens, then we get a nice buy the dip opportunity, because then they would have all the reason in the world to come in. Okay, we need to pump up liquidity and move forward. I think what's going to happen, what I hope is going to happen, is that the tariff issues are settled with the different nations, um, China's the dollar is allowed to be devalued. China gets out of the recession, and then boom, we get this boom up. Rao makes this case from the slides he released recently about from his GMI report that liquidity is about to turn up banana zone style, and fine. I'm just going to wait for what my volume weighted average price says. If that's going to happen, then we're going to climb out of this red zone and then we'll blast off. These things don't happen just out of the blue. We're going to see the levels that we're paying attention to, and we'll be able to catch that wave. But there's no point in like long term betting on that. If it's going to happen, it's going to happen. If it's not, it's going to not, and we can make our plays accordingly. But every drop, great buying opportunity, right? Every 30% down, you definitely want to be buying then.